Welcome back, ladies and gentlemen. Thank you all for joining me today. I'm very, very excited to show you guys a brand new video. Today we're going to be taking a look at my portfolio. What I'm going to do, just so you know, I look at this every single month, or at least, when these videos come out. I try to update you on my transactions, update you how I'm doing, so that way everything's as transparent as possible. You get to see what I'm doing with my money, and everyone gets to, kind of poke fun and do whatever with it. But with that being said, I try to do these pretty often, and I also do reviews of earnings, and as well as, kind of go over companies that prospective companies at least that I'm trying to look into further. So that's something you're interested in. Click subscribe down below. Make sure to like this video. Let me know if you want to see anything specifically from this video, dive a little bit deeper into it, because I'm going to kind of go through all my companies, since this is going to be sort of the 2022 wrap up portfolio as far as everything that we've done this last year, and then kind of show you what I'm thinking about going into this year. With that being said, let's do this and let's dive right into it. So hopping on over, we're going to be taking a look at this through February 3rd. I was going to do one last weekend, but I didn't have time to get around to it. So that being said, you're just going to have to put up with me having done it this weekend. So you can see February 3rd, that was the end of Friday, and you're just basically see all the numbers that have come out this week. So first things first, this is my portfolio. This is what we're looking at. The total portfolio return is this piece at the top right here. So we're only down $300, which is actually pretty huge considering where you're going to see where we were down just in December, not even at the lowest points. But basically what you can see here on the left, you get the positions, the cash, unrealized gains, realized gains, as well as some of the other metrics and things that I'm trying to track. The hard part is this is still like an ongoing sheet, so some of the stuff that may not be like perfectly accurate like I need it to be, but like the CAGR and that kind of thing is just kind of odd. But really the important thing for you, if you're looking at this for the first time, is this pie chart here, what the value is, and the performance as well. So the pie chart shows what my position sizing is, and I know it says 42% cash. A lot of that cash is allocated towards different kinds of put options or things that I've sold. So you'll see that here in a second. But again, total portfolio return as of today is down 1%, which is way better than where it was not that long ago. So just to compare that, again, as of December 16, 2022, you can see we're down almost $3,000, and it was way above that in the November lows, early December. So to see $300 from $3,000 is pretty crazy, and a lot of that had to do with the run-up that we saw in Meta this week. So moving on, here's my portfolio as of February 3rd, 2023, and I'm going to walk through all this here in a second, but just to kind of show you and give you a glimpse of what exactly the performance is on each position. You can see we have the today's gain and loss, that's as of Friday. You have the total gain and loss as of Friday again, and then the current value for each position, as well as the cost basis and some of the other things that you need to know. Now the reason why you're gonna see me having a lot more cash, and it says 42%, I probably should adjust it because it's technically restricted, is I have put options for CSV as well as RVLV. So anytime it's going to be equivalent to 100 shares, so 100 times 20 is 2,000. Quick math. So really a lot of the shares that you see being held, or the cash being held, a lot of that's really going to be hopefully put into these puts if the company drops low enough in stock price. If it doesn't, then they'll expire and it'll kind of release that cash for me to use later. Now performance-wise, over the year to date, as far as what I've done taxable-wise, so the top piece is $201 in ordinary dividends. That's going to include dividends from companies that I own, as well as I believe the interest from the actual just the cash account. And as interest rates have gone up, the cash account has earned more and more and more interest. The total realized gains and losses, for the year, down $2,000 is kind of crazy to see. I definitely want to make a video on that, but I want to see the companies that I sold off play out a little bit more before I feel comfortable making a full-on kind of where I went wrong kind of video, because I definitely know where I went wrong. I just want to make sure and see is there anything else that comes to light that we can walk through. Last one is option sales. Option sales have really saved me as far as what we have been able to do this year, so I'm really excited for that, and I really like that we made some option sales this year because we made some cash and we didn't end up having to buy anything yet. Now 2023 is going to begin as of February, so basically this is all the things that have happened in January. So dividends, $40 so far this year. We have $124 in short term. So nothing crazy. Again, it all relies kind of on the option sales and things like that of what actually happens. But the option sale is $104.32. The net short term, nothing too crazy. Again, as we buy and sell positions, you'll see it kind of fluctuate, but I didn't make really any crazy moves. So with that being said, you're going to see what my performance was. So just to be, again, transparent, in 2021, I was at 18%, and at 2022, I was at negative 28%. Obviously not happy with 28%, but again, the $2,000 that you saw earlier that I lost really came and ate up that 28%. So what am I doing so far as of the month of January? I know it says February, but this is all pretty much as the month of January. You can see my comparison again. So individually, year to date, about up 14%. Again, a lot of that's due to Meta because it's such a big position for me. And then compared to the other indexes, I don't know why the NASDAQ isn't showing. I think the NASDAQ is like 16, 17%. I don't know why it's not showing here. But year to date, 14% up. That's pretty great, double S&P. But again, we're long-term investors, so we'll have to see how this plays out and continue to find companies that are undervalued that we can invest into and put some money into, so that way they can grow that money and grow as a company. But with that being said, it's always a good little ego boost to see some good performance, especially given what happened last year. So I'll take what I can get. Now the transactions since this says October 31st, but it was really since December 16th because nothing really happened too much in between then. So we got some dividends at the end of December. We sold a call on WBD, and then I added $1,000. We got a dividend from JP Morgan Chase, and then we also got some interest on our cash. Obviously, I had a put for $15 that expired on January 20th, 2023. It expired, worth nothing, which, I'm happy, but I kind of wish I would have got the shares. I probably should have put the put a little bit higher, but, take what you can get. But this expired worthless, so we got that cash back, which means I get to deploy that cash against something else. So really, I just wanted to talk on what am I focused on this year, because I know a lot of people like to see YouTubers and other people kind of talk through their portfolio and talk about what they're interested in. And for some reason, people give a lot more weight to the opinion of someone on a video camera than their own opinion. But really, I'm just going to touch through what I think I want to do with my portfolio this year. And if you find any of it helpful, let me know down in the comments below. So again, I have a lot of cash in my account right now, about almost $10,000. Give or take half of that is probably being restricted due to the calls or the puts that I've sold. So again, if my strike price is, in this case, a strike price for, let's say, Revolve is $17.50. If the company's stock price goes below that, more than likely I'll get put the shares. So meaning I'll have to buy $17 or buy 100 shares at $70.50. So you do all the math on that. It'll be $1,750 per transaction. I have 2 contracts for Revolve. But that's really half that cash, and I'm really looking to deploy the other half of that cash and continue adding cash to this account throughout the year. My biggest position, Meta, it went up crazy. I honestly, it went up so insane on Thursday, on February 1st when they had their earnings. Afterwards, I think it was up like 20-25%. And if you remember last year when they had the first drop in users, it went down 25%. So, it's climbing back slowly. I'm still not anywhere near my cost basis. Obviously, I wish I bought when it was at like $85, $90, but hindsight's 2020. And I didn't want to keep doubling down if this was going to keep going down. So I wanted to see what exactly they're coming out with and what they're planning on doing. So it'll be interesting, one to track on the channel, one that I really am interested in following. If there is a significant drop-off and the fundamentals remain, I'll probably add a little bit more, but it'll all kind of depend, relatively speaking, to the rest of the portfolio. WBD is another big one that I have currently. It's up 10% in total as of now, but I have 100 shares of that, and what I did is I bought 100 shares and then I actually sold a call on that position. So essentially what that means is that I have a call, and if you look at the very bottom, I have a call that is a $20 strike price, and it's going to expire June 21st next year, so in 2024. So basically, I did the math. If WBD, because my cost basis is about $14, if WBD hits $20, I will get the 14 to 20, so the $6 pretty much spread if it hits that. And then if my call ends up getting executed, or the sold call that I have gets executed, I'll sell it off at a $20 strike price, and I made $100. So basically it's about a 50% move if it ends up going that high within the next year, or pretty much year and a half. So we'll see how that plays out. Continue to track it. Again, up 10%, pretty happy about that. WBD's been pretty soft, and it was at, I think, like $9 at some points during the last couple of months. So take what you can get. Nothing too crazy there. JP Morgan Chase, I'm surprised it's actually up in the total, given where banks kind of are, but I think it seems to be a little bit more stabilized banks-wise across the industry. So curious to see, keep following. It's a good dividend if you can get it at a reasonable price. It's obviously one of the biggest banks in the United States and in the world, and they also have a ton of assets. I don't know for sure if it's like the most undervalued one, but I think that overall, I like the management. I liked where they were positioning, and obviously I kind of wish I added, but I'm just going to keep looking, keep exploring, see what I can find. If I find a better opportunity for any of these positions, I'll just sell, take the cash, and deploy it somewhere else. Dropbox, I'm excited to hear the earnings call for this one. I think that there's a long runway for this company. I think that it's probably more so getting to fairly valued when it hits that like 26 to 27, 28 mark. I think anywhere in the low 20s for me is where I would consider adding a little bit more. So I'm considering, looking at that one. If it drops a little bit more, I have been looking at the options too to see if I want to sell a put or something to be able to, add to my shares, but also get some premium in case it doesn't actually hit that strike price. The last one that the other one that I want to talk about is Intel. Now, Intel's earnings call, I'm going to have to do a whole video on it, but Intel's earnings call and just earnings in general for the year was not very good. I would not be surprised to see if they cut the dividend. If they're not going to cut it entirely, they need to slash it. The cash flow is not worth it. The debt they're taking on is not really worth it. I know that some people hold this as a dividend, but I think that it'll probably go down 50%, 60% if the dividend gets cut. And I think that that's what the company's kind of worried about, because a lot of the compensation is, built on the share price. So I'm curious to see what they actually do, but I wouldn't be surprised to see if the dividend gets cut in the next couple of quarters, if the cash flow and things like that, because of the amount of ramp up that they're doing, I wouldn't be surprised to see it get cut. Now, DJCO is a Daily Journal corporation. It's a Charlie Munger led, or built really. Now, he doesn't, he's not one of the people at the company. He's still a chairman on the board, or still director on the board, but he's not like a functional person in the business model. And I'm excited to see how this plays out. I really, really wanted to add more, but I got in, right when it kind of bottoms for the year, and it didn't really go any lower, and I was kind of hoping to keep building out the position. But a $1,200 position, and it's up, 17, 18%. I'll take that. I'll take what I can get, but I would really, really like to add to this and have it drop further so I can keep buying on the cheap. But I'm going to have to reevaluate this one once I actually get through the rest of the earnings. They put out their earnings early, so I didn't do a video on it, but it's really one that I think that for me, I love that it's a small company. I love that it's a growing company. I love the growth aspect and everything of it. So it's one that we keep track of. I like the opportunity there. And then as far as going on that same route, Berkshire Hathaway. So Berkshire Hathaway has been a stable company in my portfolio since 2020, pretty much middle of 2020. I bought into the company when it was at really low prices. No one thought that, all the other growth stocks and stuff were going crazy, and everyone was making fun of Warren for not buying anything, and all of a sudden, he's up 50% of my portfolio, and everything else is down, and some of them have been down almost 60%. So I think Meta at one point was down 60%. So, it's one of those positions, it's almost like a forever hold for me, and then if it drops again, of course I'm going to buy. But for me, it's one of those companies that, unless I can find something to do with that cash, they'll compound it, and that's all I need to worry about, is whether or not it'll actually get compounded going into the future. The other companies that I hold are pretty small positions. So you have Activision and Corsair. Both are based in the gaming industry, but Activision makes the games. Corsair builds kind of the technology around the games in terms of the peripherals and things that you need to play the games. But for me, Activision is a play on the Microsoft deal. If it doesn't go through, more than likely I'll sell unless I can get a really good buying opportunity to just, add more and cut my cost basis. I was looking at Activision at the beginning of last year before it got announced. I was literally doing the work on my video before I didn't buy anything yet, but I was doing the work to actually, okay, I'm gonna buy shares, I'm gonna do this for how much. And that weekend after, I didn't finish, that weekend after they announced that they were gonna get acquired, and ever since then I just was throwing my hands up and it was just like, well, I guess if they saw it, we saw it too. And I understand the opportunity, so I'm looking forward to seeing what Microsoft's going to do there. The last company that I want to talk about, and then we'll get to the options, is going to be Corsair Gaming. Now, I love Corsair Gaming, the company. It's one of those companies, though, I didn't build it out huge because I want to see how they're going to address some of the financial things that they have been dealing with. And again, it's a really small position for me overall. It's about 2.83% of my entire portfolio. I am down 30%. I'll take that with a grain of salt. I think the total cost basis that I had on this was about $800. So I'm not really worried so much about whether or not it'll keep going down. What I want to see is I need to see the 10K first before I can make any sort of decisions around adding, subtracting. I want to see the numbers first and see the rationale of management before I actually decide on whether or not I'm going to buy, whether I'm going to hold, or whether I'm going to sell. Right now, I'm in that kind of holding pattern. I like what they're doing. I think that the recent addition that dilutes shareholders, that like $75 million that they had added, I need to see what they're going to do with that cash, and kind of what the balance sheet looks like going into the really Q4, but I need to see the 10K. And ultimately, what it's going to come down to is, do I believe the company over the long term can handle the financial position that they're in, or will they suffer because of it? Because they did have a little bit more debt than I necessarily would like, hence why it's such a small position in my portfolio. But I do think that the growth is there, the opportunity is there, and some of the markets that they operate within, they sell at a higher average sales price, as well as they have a higher market share. And with a new kind of PC and refresh that's coming, and it's kind of been active as GPU prices have dropped, people are going to be building computers, and Corsair sells a lot of parts and a lot of peripherals that go into those computers and gaming and things like that. So it'll be interesting to see. This has been one that I've been covering a lot. I've been doing quarterly reviews of the earnings, as well as just different updates that I have along the way. Now, lastly, again, CSV, Revolve, and WBD. So CSV is Carriage Services. It's a funeral play. I really didn't, I wanted to buy shares, but I didn't want to, take the risk of buying at too high of a price. So I decided, let's just set the price at $20, and then if it gets put, cool. If it doesn't, oh well, I get the cash. If it expires, worthless. So that's what I decided to do. Along with that, Revolve is kind of in that same boat where I think that it hit 20 to 21, and I didn't end up adding any more puts or buying any shares, and I just sold the put that you can see here, and I got a good chunk of change on it. It's actually, the puts are selling for a really high premium right now across the board. I think part of it's because the company is so shorted. The short interest is pretty high. I think it's like 20-30%. So it'll be interesting to see what this all plays out to. But ultimately, my thoughts on the rest of the year, I'm just going to keep finding companies that I'm interested in, keep finding sectors that I'm interested in. I really want to do semiconductor deep dives, so I'm going to keep doing that. Let me know if you have any companies that you want me to look into down below. I'll make sure to take a look if I know what I'm looking at. But with that being said, happy 2023, happy investing, and have a great day.